Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Fairly good session, a second straight day of gains for the benchmark indices. But of course, we are trading in a range, that range being 24,500 to 25,100. Within that range, we had an upward bias today ahead of the RBI policy. That's tomorrow at 10 a.m. That's when the decision will be announced. But a good triple digit up move on the index, although we did cool off from the day's high that was at 24,875. How are investors positioned or traders positioned ahead of the RBI policy, and what levels should one really be watching out for here on? Let me bring on board Ajit Mishra, who's the Senior VP Technical Research at Religare Broking. Ajit, always a pleasure chatting with you, but fairly range bound, and we had the weekly expiry as well today, but we also had a weekly expiry on the Sensex on Tuesday. How were they divergent? How are the trends looking? And even one more point I want to point out is the fact that we had the implied volatility. IV shooting up earlier this week. What's the scene like when it comes to the implied volatility as well? What are the cues you're getting from the options market?
Yeah, good evening, Nandita. So yes, we are seeing fair bit of volatility. We are in the third week of consolidation. Means this week, starting from the beginning, we are seeing volatile swings. So as you rightly mentioned that on the day of Sensex expiry, weekly expiry on Tuesday, the move was diverged. Means the bulls were holding guards, maintaining above the short-term averages. But on that day, we saw that profit taking pushed the index below 20 EMA mark. And today, after 2 days, we saw almost a different kind of a texture in the market. Means the Reliance Industries and some of the other heavyweights kept the tone positive from the beginning and helped the index to trigger noticeable recovery as the day progressed. So it seems like that there's a tussle going on at current level for the next directional move. Since Nifty has again reclaimed 20 EMA, which is important or the first line of defense, it would be critical to see how the market is going to perform tomorrow, because we all know, with all eyes on the outcome of the MPC meet, wherein 25 basis point is already discounted. The way the rate sensitives are placed means banking index have recently made a new high. Reality stocks were among the top gainers of late, and then auto selectively are also participating. So once we have this clarity whether we are going ahead with this 25 basis point cut or not, and Nifty sustains above this 24,600 mark, then probably we can see further recovery towards 25,000 mark.
Okay, of course, a big event to watch out for. Post that, perhaps you will take some direction, and a decisive one at that. But how's the positioning been like on the Nifty Bank Index ahead of the big event? Have traders taken positions in private banks, PSU banks, and if yes, which are the stocks that have seen a lot of action?
So interestingly, you know what? It's been almost 1.5 months that we are seeing a very tight range consolidation in the banking index. Almost like 7,000 point kind of a rally that we had, which helped the index to make a new record high. And since then, we are seeing this consolidation while holding up the short-term averages. So, like what we've shared, of late we've made a new record high also, but we couldn't sustain. Reason that the private banking majors are slightly on the back foot. If you will see that Axis, ICICI, they are sitting on the sidelines, in fact, witnessing profit taking. At the same time, SDFC is holding strong. Then we have Innocent Bank, which is also, trading in a very tight range. So private banking majors, we don't have any major, clear directional trend as of now. PSUs, on the other hand, they have done exceptionally well in the recent weeks. And after this move, I believe that there could be more legs to the up move, in the PSU pack. It's not that the participation will be less in the private banking majors, but it's going to be selective. So HDFC Bank, SBI, Federal Bank, these some of these stocks that one should keep on radar. In case of there'll be any further movement or positive uptake in banking index in the coming sessions.
Okay, that's the view on the banking lot. But from banks, let's move to Reliance Industries. The stock was up 1.5% today. There is a bullish report on the stock from JP Morgan. They have an overweight rating target price is in excess of 1550 rupees, and they believe that the earnings over the next 2 years should be better than the earnings of the last 2 years. And of course, the stock has seen some bit of pressure on large earnings cuts that were driven by weaker commodity EBIT. And growth in consumer businesses should lead to better bottom line growth going forward. That's according to JP Morgan. In terms of levels, the immediate levels or immediate targets to watch out for. Anything in mind? Right now, I think the stock is quoting at somewhere around 1442. 1500 levels, would that be the target on this particular counter?
So certainly, Nandita, because if you see that after this, consolidation range breakout means the stock was hovering in a very broader range, 1320 to 1100 for almost like 3 4 months. And post that breakout, we saw a very swift rebound followed by this recent consolidation. So the stock has formed a fresh buying pivot, while holding above the short-term averages. So we believe that yes, in the next leg, 1520, 1530 is something the stock might test. So if you are holding any long position and planning any fresh trade, you can go ahead with 1400 as a stop loss with 1520 as a positional target.
Okay, that's the view on Reliance Industries. But of course, just want to give you a disclaimer. We are part of the Network 18 group that's owned by Reliance Industries. So if you are taking positions in the stock, please consult with your financial advisor. But next on the list is Dr. Reddy's. The stock has seen a good move today, a 3% up move. Of course, we've seen HSBC upgrade the stock to buy from hold. Target price has been raised to 1445 rupees from 1235 earlier. And they say that semaglutide will be a big fat opportunity for the company going forward, and it will be one of the early movers when it comes to the India launch with respect to this diabetes drug. If you compare the charts of Dr. Reddy's to Sun Pharma, you've seen divergent moves, wherein Dr. Reddy's has seen a good 10% up move the last 1 month. Sun Pharma hasn't had such a good ride, so to say. News-based moves have been there in the stock. If you compare these two charts, would you stick to a Dr. Reddy's given its outperformance? And 1290 is where it's at right now. Which one would be the next levels to watch out for?
Right. So you rightly pointed out, Nanda, that when it comes to the 1 month performance, definitely Dr. Reddy has upper hand. In fact, if you see the entire pharma pack, you would find the stock on both sides. Means at one end we have Divi's Lab, which is quoting at the record highs. Dr. Reddy's, performing well. Then at the same time, Sun Pharma, Lupin, Biocon, they are trading in a very tight range. Of late, we have started seeing fresh traction in Glenmark also. So again, within this space, one needs to be very selective, citing the mixed trend within the sector. For Dr. Reddy specifically, post the reversal pattern breakout, the stock has been gradually inching higher. In today's session, also we saw decent amount of uptick with volumes. So this indicates further up move possibility towards, let's say, 1340 to 1380 levels in the near future. So yes, you can definitely stay put. 1240 now should be your stop loss for the existing position, and you can wait for 1380 as a positional target.
Okay, those are the levels to watch out for on Dr. Reddy's. But from Dr. Reddy's, switching to M&M then, the stock has been sideways. Looking at the last 5 sessions also, it has given good or positive returns. But how is it placed on the charts? Autos have not had such a great run of late. Of course, there is the whole rare earth magnet issue that's playing out. Auto sales are also a mixed bag. But M&M is one of the better poised, fundamentally, given its outperformance in the SUV segment. But chartically, how would you look at an M&M right now? And would you even compare it to Maruti or Tata Motors? How would you trade into all these three counters?
Right. So, Nanda, you rightly mentioned that again here within the sector also you will see the diverse move. Means at one end we are seeing M&M holding strong. At the other end, we have long way to go when it comes to Tata Motors. It's still struggling closer to its recent lows. Then we have Maruti in the middle. So I believe that when the sector is not giving any clear indication, the prudent approach is to stick with the outperformer. And in this case, M&M definitely leads the pack. The stock has been holding strong around its record highs while maintaining up with short-term averages. So it's a normal consolidation that we are currently seeing, and as a disclosure that we have recommended this stock to our clients also of late. If I'm not wrong, 3200, 3240 something that we have recommended as a target with 2950 as stop loss. So definitely you can still consider this since we have an important event tomorrow where rate sensitive, including auto, will be in the focus. So one can continue with long position. They can buy fresh also. Now coming to Maruti, on the other hand, I believe that yes, the decline seems like a kind of a breather that the stock might witness after this recent fall. But for any meaningful recovery, we need to reclaim 12,500 mark. As of now, Maruti should be on the avoid list. And for Tata Motors, as we all know, that's a very tight range consolidation the stock has been experiencing, but is still below its major averages. So when it comes to the stock selection, the first and the foremost criteria is whether we are getting the better performance within the sector or not. So for Tata Motors, I would recommend to avoid until we cross and decisively sustain above 750 mark.
Okay, that's the view on the top three auto names, so to say, Maruti, M&M, and Tata Motors. But I want to talk about the shipbuilding companies as well, the likes of GRSC, Cochin Shipyard. GRSC hit a fresh 52-week high today. Cochin Shipyard, the stock has taken off. Last 1 month, it has rallied in excess of 50%. Still some ground to cover when it comes to 52-week highs. But given the momentum, should one ride it? Should one look at booking profits? I mean, how should one look at this solid surge in some of these names?
So yes, Ananta, so like what we were discussing at the beginning also that while at the one end we are seeing consolidation in the index from last 3 weeks, but on the thematic front, means earlier it was defense, then the other PSUs like from the banking space, of late railways, all are offering buying opportunities on the rotational basis. So GRSC definitely it looks slightly overstretched to me. The stock is trading at the record highs. Cochin Shipyard, still we have a meaningful upside left for the record highs. So I believe that in case somebody is chasing momentum and they are very disciplined in maintaining stop losses, then only they should trade these counters. Means today it was up roughly around 13.5% with volumes. So probably 2200, the previous swing high should act as a support now in case if there will be any profit taking. So with that as a stop loss, definitely you can go long with 2750 means the record high zone as a target area.
Okay, that's the view. Chasing momentum, but with strict stop losses. But what about the capital market plays, especially BSC? BSC, hit a fresh 52-week high today as well. Angel One was another one that was reacting to some data that came out. But all these capital market plays, are once again witnessing strong traction. Do you spot a trade, or is it time to take a positional? Is it time to look at it as a positional play? I mean, how does one look at the entire capital market space right now?
So Nanda, I feel that like in some of these stocks look stressed to me. Means it's almost like a vertical up move. When it comes to the BSE, means there was hardly any pause. And since the news around NSE IPO and SDL IPO is buzzing, so since then we are seeing further momentum in across the capital market names. So I believe that those who are holding longs, yesterday's stop loss means in today's case in 28. 10, 28, 15 was the today's low. So that should be a stop loss and keep on riding the momentum. Those who are planning any fresh trade, they should also follow the same rule. Means yesterday's low should be a stop loss in case if you are planning any fresh trade. Ponzi stock, mostly stocks are trading at the record highs, especially BSE, and of late we've seen a very sharp recovery or up move in CDSL and other names also. So again, it becomes very difficult to know where the momentum is going to fade away. So as of now, the momentum is intact, but those who are risk averse, they can sit on the sidelines. They're not going to miss the party. There are other opportunities also where the risk to reward is favorable. But here, in case if you are chasing momentum, be strict with your stop losses.
Okay, that's the view on some of these stocks like BSC, CDSL, and the likes. But I know there's one stock, Brain Bees, First Cry, listed last year. So I'm sure you'll have limited data, but the kind of traction it has seen, it's pretty strong. In the last 5 sessions, including today's up move, it's up almost 15%. Last 1 month, 22%. But the stock is below its IPO price of 465 or thereabouts. With the kind of data that you have, would you be able to spot a trend here? Would you say that the a retest of its IPO price could at least be in the offing in the coming days?
So certainly yes, Ananta, because last year we all know the kind of frenzy that we were seeing in the primary market, and across the board we were seeing IPOs raining. So after this corrective phase, we have started seeing some of these stocks trying to bottoming out. Uh, First Price seems like one such name wherein we are seeing noticeable volumes, in the last leg of this, consolidation pattern, conclusion. So with this, price action and volumes means, we are talking about almost 5 times, 6 times of the average volume. So this seems like a serious volumes, and again, since we are attempting a reversal, 380 should now be your strict stop loss. In case if it fails to hold this level, then probably we might again see, consolidation or profit taking. Otherwise, 460, 480 is something the stock might test. So the risk to reward is favorable. Definitely, one can attempt fresh longs with that, 380 as a stop loss.
Okay, that's the view. 380, a crucial level to watch out for on a first cry. But last stock really on my list before we come to your recommendations is PB Fintech. The stock has been on an upward trajectory. Last 1 month, double-digit gains, and all the other insurance stocks are also fairly upbeat. But we had a note from Citi recently which said that this particular stock, PB Fintech, has the legs to retest its previous record highs. 2246, that's the 52-week high, and the stock is quoting at 1900. How far or when do you expect that distance to be covered really from here to 52-week highs?
So, see the kind of price action that we are seeing in the stock, especially from the last 1.5 months. It's a very steady recovery and gradual rebound. So this seems like a very strong pattern overall. Means we are not seeing excessive volatility. The price action after every up move followed by consolidation seems like a base formation before the next leg of the up move. So in the first leg, once we see the stock towards, let's say, 2040-50 area, that could be the first area where the stock might take a breather. And in the next swing, probably we can make a new high. So as of now, 1750 is the new base for the stock. So for those who are looking for fresh trade, they can definitely consider this with 2050 as a first target, and then probably 2300 plus zone as the next target area.
All right, that's the view then. But before I let you go, Ajit, any recommendations for our viewers?
So, see, two stocks which I like means if you see Bharat Forge, the recent price action indicates, because it's very important, Nanta, after this, strong spurt across the board, identifying where risk reward is favorable. So, Bharat Forge is basically offering one such opportunity, means post the reversal pattern breakout, it formed a fresh base around the major averages. So here, 1320 is what we are eyeing that the stock might test in the near future with stop loss at 1245. Another stock from the metal space where we have seen a fresh breakout, decisive breakout rather, it's Hinzing. Almost like 2.5 months of consolidation has ended with a decisive break, and 550 is something that the stock might test in the near future. So with stop at 475, one can accumulate Hinzing also at current levels.
Okay, Bharat Forge and Hindustan Zinc, two recommendations from Ajit. With that, Ajit, lovely chatting with you this afternoon. Always a pleasure. Look forward to our next one as well, and have a good time.
Same here, Nanda. Thank you. Thank you.
Thanks a lot. Well, with that, we've come to the end of this edition of Closing Bell. It was a good day of trade, second straight day of gains. Of course, tomorrow is the big event, RBI policy decision at 10 a.m. Let's hope that we could see a decisive, directional move on the Nifty post that. But for now, we have spent a lot of time, in the range of 24,500 to 25,100. Let's see how things really pan out and what the RBI policy decision manages to do when it comes to market moves. But completely timed out. Thanks a lot for tuning in. I'll see you tomorrow morning at 9 a.m. on opening bell, and post that. Remember, we have this exhaustive coverage on RBI policy lined up for you guys right from 10 a.m. with the RBI governor's speech, and post that we'll have a battery of experts to decode the policy decision and the forward guidance that the RBI will provide. But with that, thank you for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great evening.